A very good morning to all of you. On behalf of the Committee on Public and Government Financial Management of the Institute of Chartered Accountants of India, I welcome all the viewers to the third webinar on financial reporting and tax compliance of ULBs, under series of webinar on the theme Good Governance System in Government. Today's session will be delivered by CA Sumitaba Ray, who is an eminent expert in the area of auditing, accounting and taxation in ULBs. Before going further, I would like to give you all a brief overview of the committee's activities. As a partner in nation building, the ICAI through CPGFM is contributing to improve the accounting, financial reporting, and financial management system in all tiers of government in India, including local bodies. Also known as local government, that is at the third tier of government, the committee is involved in sensitizing officials of various tiers of government in India by various means such as organizing workshops, developing relevant e-training modules, etc. Submitting technical inputs on various documents of Government Accounting Standards Advisory Board (GASAB) in India and internationally on the documents of International Public Sector Accounting Standards (IPSAS) Board. Running certificate course on public finance and government accounting that can be attended by government officials as well. Formulating accounting standards for local bodies ASLBS and providing technical support for certificate courses for accountants of panchayats and municipal bodies. That is a joint initiative of Office of C&AG and ICAI. Our moderator for today's session is CA Naveen Garg sir, who is a co-opted member of CPGFM, has served as Treasurer, Secretary, Vice Chairman and Chairman of the Guwahati branch of ICAI. Today's webinar will throw light on the concept of financial reporting and tax compliance of ULBs. I hope that you all would be benefited from the deliberations of the webinar. After completion of the program, unstructured CPE learning of the eligible members who will attend this webinar will be uploaded by us. Now I invite the moderator of today's session, CA Naveen Garg sir. Over to you, sir.
Thank you. Good morning to all. On behalf of the ICI, I welcome you all to this third webinar on financial reporting and tax compliances of urban local bodies that is being organized by the Committee on Public and Government Financial Management as a part of series of webinar on the theme Good Governance System in Government. I welcome our distinguished speakers here, Sumitab Roy, expert in accounting and auditing in ULBs. Our esteemed chairperson and vice chairman of committee, CA Kamisa Soni and CA Prasanna Kumar D, could not join the webinar due to council duty. Just about the topic, financial reporting and tax compliances are critical for transparency and accountability of urban local bodies, ensuring that public funds are managed efficiently. Accurate financial reporting help urban local bodies make informed decision, improve resource allocation, and enhanced public trust. Effective tax compliance system can significantly boost revenue generation, enable urban local bodies to fund essential services and infrastructure projects. Today's webinar will focus on prevailing financial reporting system in ULBs and how it can be improved, and applicability of Income Tax Act and GST Acts and compliances requirement under these acts. I once again thank you all for joining in today's seminar. I am confident that today's webinar will be a valuable learning experience for all the participants. Now, on behalf of the committee, we would like to introduce our speaker, C.A. Roy. Mr. Roy is a chartered accountant with 25 years of post-qualification experience and did his graduation from St. Xavier's College, Calcutta, and post-graduation from Annamalai University. Mr. Rai worked for Municipal Corporation of Calcutta, Bhubaneswar, Bhopal, Indore, Gwalior, and many other cities and states of Gujarat, Assam, Uttarakhand, Telangana. Mr. Rai has experience of working with Government of India Department, with state governments of Tamil Nadu and Mizoram, with Delhi Finance Commission, and with Government of Nepal and Bangladesh. He worked as an international fiduciary management specialist in Nepal for school sector development program, and presently working as a team leader, public finance management specialist for strengthening municipal financial management program for Narayanganj City Corporation in Bangladesh. He is a regular training faculty for various municipalities with ICI, GASB, and with Asian Development Bank. He was also invited by Lal Bahadur Shastri National Academy of Administration, Missouri, to participate in National Consultation or Urban Training Needs workshop. Now it's time to listen to our expert speaker, Mr. Rai. I request him to please deliberate.
Uh, Many thanks for the introduction. First, a very warm morning from Calcutta. It's very hot and it's very humid. So, a very warm morning from my native city. And I welcome first all the participants who have joined this webinar. And I also wholeheartedly thank the committee for giving me this opportunity to deliberate on various topics. Now, committee is allowing or rather forcing me to give a lecture every week. So it has becoming a very routine affair for me. And I also thank the moderator of the day, C. Naveen Garg, for giving this introduction. So since it's a 2 hour webinar and we have a, a long topic or a long discussion to be done, so let's start. Let me share the screen and let's go into the deliberation directly. Thank you all again. Again, a very warm welcome. And to be very honest with you, when we were students and when we joined the profession about 25 years back, this type of technology was not there. These webinars were not there. These topics were not there. So I would think the members of the day or who are members now are obviously getting a big push to all these sectors. And we learned because my first consulting opportunity or other sector opportunity came from ICI ARF only way back in 2004. So I was a team leader for ICI ARF. So the institute has given me a lot. So I always try to give back. So I never said no if not my time overlaps with some other commitments. So thank you again, the committee and the institute for this opportunity. Let's share. Okay. The topic that had been selected for the day is on financial reporting and tax compliances for ULBs. Now, this is as I understand, there's a series of discussions and webinars going uh, on urban local bodies. Now, one thing I should admit that these webinars are very good. I can do it from anywhere. I mostly do my webinars and classes from Bangladesh. Though I have a time difference from there, but I do it from there. So no issues. I can do it from anywhere. But the problem is that I don't see for whom I am doing it or who are the other side. So this is a big issue that I don't know whether people are listening to me or they are not listening to me or whether liking or they don't want to listen. So it's an issue. And also the webinars have brought in a big problem for me. Previously, when I used to take these physical classes, I mean, I had been on behalf of the institute, I've been everywhere in the country. So at that time, I used to get a cup of tea also. So cup of tea and a glass of water. So nowadays, the institutes have become very conjuice. I said don't give a cup of tea and a glass of water for these seminars. But still, it's an opportunity always. So let's start. So anyhow, I don't know who are the other side or who are the members listening to me. So only one request to the members is that since it's a session and I have to go by the flow of the session, so if you have any questions and answers, any chats and anything, please put it in the Q&A box and the chat box. Please don't raise your hand because that's an issue I always find very little distracting. I mean, I can't look into those things. So please don't raise your hands. And often you just put your question. So at the end, definitely I will come back because I will take the 2 hour session at a stretch. Usually I give a break in between, but here I will be taking it a stretch. Now, first, slight a little disclaimer from my side. Whatever views I would be expressing, these are all my personal views. Here, neither the institute or any regional branch of the institute or any committee of the institute are anyway their views are involved. So these are all my personal views. And if anybody wants to uh, take a reliance on my views, please get a due diligence done on my views, opinions, estimates, whatever. So that's a disclaimer. Now, it's always good to have a disclaimer at the very beginning. So otherwise, we don't know. We sometimes get very worried about this knowledge legislations which are now in vogue. Now, coming to the more business part of the webinar, I I wanted to structure the session in a little bit a different way, not exactly starting with financial reporting. I started with the local body governance. Then I will touch upon the 74th Constitutional Amendment Act of 1992, and then a little bit on the impact that the Constitutional Act had on the urban local bodies. Now, the basic philosophy of getting into this a little bit is that I really don't know who are the participants, because so I don't know what is your understanding about the urban local bodies and their governance in India. So since I don't know, I thought of going a little couple of steps back and then come to the main topic. Then we will be taking up the accounting, the urban local bodies and reforms, and then the financial reporting and the taxation part. So this is the more or less a discussion or the presentation outline or the webinar outline, whatever you want to say. So let's start. Now, as you all had been doing some sort of webinars or courses, nowadays Institute also organized a lot of courses, certificate courses on government accounting. So I don't know who all have a knowledge, but just to have a refresher idea that how we will be dealing with the whole structure, or how we deal with the structure now. We have a three-tier government in India. Now that's very important to understand. Now a three-tier government means it starts with the union government. We also call it a central government. Then we have the provincial government or the union territories, and then come the local government. Now this is a hierarchical form. Please note, this is a hierarchical form. That means the local government reports to the state government and state governments report to the central government. So in a federal structure provided by our constitution, we follow this three-tier structure now. Now this three-tier structure became more visible, became more demonstrable, became more legalized from the 74th Amendment. It was not so that earlier. Though local bodies were there, they were under the state government, but the way it is structured now, it happened because of the 73rd Amendment for the panchayats and 74th Amendment for the local government. So that's why it is little bit important to understand about the 74th Constitutional Amendment also, while we will be discussing anything on urban local bodies. Because as I see, if I myself am as an accountant or anything, accounting, anywhere you go, anywhere in the world you go, whether you go into the Bermuda Triangle also, or you go to the Antarctica, or you go to Japan or Pakistan, Bangladesh, anywhere, it's debits and credits. There is no second thought about what is a debit and what is a credit. So that is accounting. But what we debit and what we credit is the most important thing to understand. Now, in the case of a local body, the debits and credits will be slightly different from the debits and credits that we do for a corporate body. So therefore, it is important to know what we debit and what we credit. And to know that, we have to know the functions also. What the urban local body is doing, or what a body corporate is doing, what is doing. So if you're doing an accounting for a garments industry, your raw materials will be something. And if you're doing a accounting for a steel industry, your raw materials will be something. So every industry will also have some different. Yes, we may be calling it a purchase and sales, but the functions are always different. So accounting is just an end activity of the chain. The first activity is to understand what the institution is doing. So the institutional understanding is very, very important. That's why we are. I am taking a little bit of time to understand that whole stuff. Now, we are not going to discuss about the union government, the state government, and the union territories. That is not the purview of the day. We will be concentrating on the local government. Now, local government, when we say, there are basically two types of local government. One in the rural sector, that is called the rural local government, RLB, and the urban side, the city side, the town side, we call it urban local bodies. So ULB is the urban local body of the local government. But if you look into the constitution, in the constitution, nowhere the urban local body has been defined. It is a connotation that we have picked up. Rather the experts and the users have picked up urban local body. But if you look at the constitution of our country, it always says municipalities. So municipalities is the word that has been used in the constitution, and we will very strictly go by the constitution per se. Now, in the case of local government, as I say, if it is a urban site, it will have a different categorization, it will have a different classification, it will have a different characteristics to the urban local bodies. And finally, if it is rural local bodies, it will have something different. We'll come later to the details later on. But whatever we do, the lowest administrative unit of any organization or any activity in India starts from a ward, a municipal ward. That's the lowest administrative unit in the case of urban local bodies, and in the case of the rural local bodies, it's called Gram Panchayat. So ward and the Gram Panchayats are the lowest administrative units of a particular of our total federal structure. So obviously, wards and Gram Panchayats are a part of the urban local. That's why we, the citizens, are more connected, should be connected, the wards and the Gram Panchayats more than anything else. Okay? So this is a basic structure, and this we have to keep in mind. Now, local body governance in India, it has a long history. Now, the history basically started from much before the Indus Valley civilization, say 2300 before Christian era. Now, if we look into the history, we will find that in those days, the rulers, the emperors, the rajas, the maharajas, whoever was dealing with his own area, the fort area or the civic area, they had to deal with the civic governance. There used to be good roads, as the historian said. There were planned streets, magnificent drains. Each has to be cleaned regularly. The solid waste management is to be done regularly. Now, these are all the civic functions to keep the city clean, to make the city livable, to make the area livable. So those, today, whatever any municipality or any panchayat is doing today, it has been done 3,000 years back also in India. So we had a long history of the urban governance. Only the structures, the legal structures, the legal framework, the institutional, the definitions have changed over the years. Let's see how it has changed. The first structured municipality was formed in Madras Municipal Corporation. Now, if you look into the history, the British India, when it came down to India, they brought their European culture, European philosophies, European thought processes in India because they had to do business over here. And Madras, Calcutta, and Bombay were the first three port cities. Now, all these are port cities that were the first place where the Britishers started building their empire. And when they came down to Madras and the fort of Madras, it was a mud fort at that time. So when that was there, they brought the first municipal governance and they created Madras Municipal Corporation in 1687. Later on, it became the Calcutta in 1726. Calcutta and Bombay was formed. And at that time, the municipalities were called a mayor's court because at that time, the mayor used to be basically a judicial person, and he used to give some pass orders on the law and order also. So the ward mayor, today we use the ward mayor for the highest authority in any municipal corporation. That ward mayor was brought in by the Britishers, and that was a different meaning at that time. Today it means something different, but that ward or the name remained. Now, after 1726, when the Britishers were moving into other parts of the country, this municipal governance was also going into those cities also. Meerut, then the UP cities, when they were moving, then Delhi came. All these were started, they're moving out. Now, obviously, urban governance was important to them. Why? Because they have to deal with the local people. They have to deal with the local administration. That's why they brought the European concept of the whole thing. Now, but in 1882, the then Viceroy of India, Lord Ripon, now he made a resolution that the municipalities of the local self-government will be formed by a democratic process. So that's the first time in 1882 the democracy of the municipalities were brought in, and and elections were used to be held to elect the people's representative. Now that's why Lord Ripon is also known as the father of the local self-government of India. And now, very aptly, if anybody is from Chennai or if anybody knows about Chennai, and since the Chennai Corporation, now it is called COC, Corporation of Chennai. If you go to Corporation of Chennai's the foreground lawn, you will find there's a statue of Lord Ripon. It's very aptly put in because Lord Ripon is the father of local self-governments in India, and that statue is also in the COC. That's the first municipality of our country. Now, when we talk about Lord Ripon and India at that time, it covered the whole of the subcontinent that include Bangladesh, India, Pakistan, Nepal. So this was all under there. So the municipalities, if you go to Kathmandu or if you go to Narayanganj, where I walk, these municipalities were formed exactly the time when these 1882 Lord Ripon's theories were coming. So Britishers had business over there also. So it happened like that. Now, then comes the more structured, legalized form. In 1990, the Government of India Act made a resolution that and gave powers to the democratically elected local governments. So some powers now were given, which were erstwhile being handled by the Crown and the Queen from England. But now they got some powers because until unless you give powers to the local bodies, they will be not able to perform. But the most important thing happened in 1935 Government of India Act, where the entire purview of the local government or entire response to the local government were given to the provincial or state governments. Now, at that time, during 1935, many provincial governments have already come into place, like, say, the Bengal government, the Bengal region, the Nizam region, the Hyderabad region, and the Maratha region. So, all these regions have separate provinces and provincial government. And now the local bodies of that area were given the responsibility of the provincial government. Now, this we still follow. That's why our constitution have made it a point that all local bodies will always be under the state list. Because if you look into Schedule 7 of the constitution, Schedule 7 and Article 246, you will find that it has got three different lists. List 1 is the union list, list 2 is the state list, and the list 3 is the concurrent list. Now, all these three lists gives the functions of the respective governments. Like the union government, if you look at list 1, uh, it includes civil aviation, it includes defense, it includes railways, it includes telecommunication. So all these are functions of the union government, and no state government can carry out these functions. At the same time, if you look at the state list, you will find they have got certain functions like law and order. So law and order is a state function. Irrigation, minor irrigation is a state function. Management of rivers is a state function. Management of local bodies is also a state function. So therefore, local bodies as given by the 1935 Act, that is still being carried by the Constitution, and we are still following it. All local bodies, urban or rural, is under the purview of the state government. And the third list is the concurrent list, which, I mean, the functions are listed, which anybody, I mean, both state government and union government can take up. Now, so that's the 1935 Act. Now, the next important thing happened in when Mahatma Gandhiji gave the narrative of Gram Swaraj. Now, his ideology or the philosophy of Gram Swaraj was that if India has to become democratically strong, then the entire foundation must start from the gram or the villages. Now, obviously, it was villages, but cities are also included because it's not only villages. Because in any state, any district, there will be a combination of the rural and the urban side. Now, based on that, the Panchayati Raj system was started in Rajasthan in Nagaur district on 2nd October 1959, and then in the state of Andhra Pradesh, in whole Andhra Pradesh, and then it started following. So then the Panchayati Raj also started become more visible and a viable organization because of the constitution, because of the philosophy of Gram Swaraj, etc. And by that way, it went on. So 50s and 60s, we started developing an independent India. The structures, many municipalities were formed, etc., etc. The first thing that happened more recently, and that we all refer to, is the 73rd Constitutional Amendment. Now, 73rd Constitutional Amendment gave the constitutional status to Panchayati Raj institutions, and it included the 73rd Amendment, a separate chapter called Part 9 for the panchayats. So that's a separate chapter added, and the constitution gave how the union government and the state government will give powers to the panchayats. Exactly on the same line, the 74th Constitutional Amendment was passed on 1st June 1993. So it's almost now 31 years ago. And it mandated that the urban local body should be given certain powers and to perform in the cities. And the state must take away the authority and make them more autonomous. So that's why the local self-government, when we call local self-government, the government should come from inside, from myself. So that's a local self-government, and that's why the autonomy was given. But if you look into the pan-India situation, if you are very critically analyze it, the autonomy is not uniformly given to all local bodies. I mean, still some state governments are holding certain powers back, certain functional autonomies back, but still it is there. I mean, overall, we can say yes, it has happened. Now, this particular landmark decision, enactments, the constitutional amendments, is basically based on the philosophy of Gram Swaraj of Mahatma Gandhi, where it said that for a democracy to usher in a good country, we have to give the power to the last people standing on the village and the city. Now, what happened by this administrative structure is that this became more structured. Now, I won't go into the top government of India that we all know. Under that, we have the state governments and the union territories. Now, under that, in some states, you will find the concept of divisions, where a few districts together is made a division. Now, this is an administrative division for some administrative benefits. But if you look at the constitution, refer the constitution, then you won't find that concept of division over there. So these divisions are not also very uniformly applied across all the states in India. So some states have done it because for the administrative benefits, some have not done it. But below a division, there will have to be a district. Now, this is a constitutional structure. The district, which should be managed by a Zilla Parishad. Now, actually, what happened? There is always a district magistrate. Now, district is governed by or administratively ruled by a district magistrate. Now, in any district, I mean, excepting very few districts of a very modern cities, in any district we will find there is a combination of the rural side and there's a combination and there is and the urban side also. Now, so under a district there will be a rural side and the urban side, and for the rural side, under the Zilla Parishad, you will find there are blocks or tehsils. Now, blocks will have a different structure, usually governed by a block development officer or a BDO, which is from the state services. And under that, there will be Gram Panchayats. Now, please remember, in a rural local body, the district, the Zilla Parishad, the blocks, and the Gram Panchayats, hierarchical mode. They are in a tier form or a hierarchical. So one report to another. So a Gram Panchayat will report to block, a block will report to district. So this is that. So that's why the picture is showing in this manner, one after another. But the rural side, there are no hierarchy. It is a flat, a horizontal types. So one is not reporting to anyone. There are usually the constitution have given there will be 3 types of municipalities, not hierarchical types. 3 types. One will be called the municipal corporations or the Mahanagar Palika. Another will be it's also called Mahanagar Nagar Nigams also. So in every state, it will be called differently. Then there will be a municipalities, and then there will be a Nagar Panchayats or town panchayats or city councils. Now these types are classified based on the area. Means what is a population or what is the area of that particular municipal of this body, urban body. Now, if it is a large area, obviously it will be municipal corporation. Smaller than that, a municipality, and smaller than that also will be a Nagar Panchayat. Now, please note, these Nagar Panchayats are a little type of it holds a characteristics of both the rural side and urban side. So there is basically a transition. So these Nagar Panchayats will one day become municipalities, and a few municipalities may come together and become a municipal corporation, and that's happening. But whatever is a type, there will be a ward. So ward is so we elect a ward council. Then the ward councillors make a council. They make a board or a corporation, and that governs the urban local bodies. We are not discussing about the Gram Panchayats and the local bodies today. So kindly, then we will concentrate on these 3 types of the municipal bodies types. Now, 74th Constitution Amendment. Now, running through it, the 74th Amendment, 1992, added Part 9A to the Constitution. So those who are interested to know more about the urban local bodies or the municipalities, please refer to Part 9A of the Constitution. That will give you a clear idea that what the constitution has delivered or expects the urban local bodies to give. Now, it recognized municipal governments. It is a three-tier government. The municipal governments, formally, when it was given that structure, it became a three-tier government along with the union government and the state government. So that was very clearly deliberated in the constitution. Now, when the constitution gave these three types of bodies, three types of municipalities, the corporations and the municipalities and nagar panchayats, one thing the constitution did not do, that what should be the categorization of a municipal corporation or municipal nagar panchayat. It did not define it directly. It just said it will be based on area. Now, technically speaking, the constitution cannot do that, because since the local body is under the state list or the state list or list 2 under the 7th schedule, so this has to be decided by the state government, that what shall be the size of the area of a municipal corporation or a municipality nagar panchayat. So that's why they left this decision to be given by the state legislations. Now, this is an unique thing that we must understand. Now, when we are doing a corporate audit, we have only a single legislation to understand, the Companies Act. When we were students, we studied 1956 Act. When we practiced, we came to 2013 Act. Those who are new, fresher students, they must have studied the 2013 Act. They have not done the 1956 Act, but the single Act. Income Tax Act, the GST Act, these are all, there's a single Act. But when somebody is working in a municipality, please remember, there are as many number of legislation, there are so many number of states. In fact, in the state which I belong to, West Bengal, we have got 6 municipal legislations. Kolkata has a separate legislation, Howrah has a separate legislation, Chandannagar has a separate legislation. So in a municipal corporation also there are 5 legislations. But in other states, there will be an act of municipal corporations, there will be an act for the municipalities. So to understand municipalities, we can not only stop ourselves at the constitution, we also have to understand the state legislations also. Now, as I said, 74th Amendment was very clearly said that these will be 3 types and let the states decide. Now, Nagar Panchayats were given a special categorization because that has the characteristics, as I said, of both the rural side and the urban side. So they had a mixed population. There is some farming also. There are some non-agricultural land also. There are some developed malls also. So it is a little critical way of dealing with a Nagar Panchayat. Now, the 74th Amendment also added a schedule called Schedule 12. Now, this Schedule 12 is only for listing the functions, the urban local bodies, the municipalities. Now, if you just for your information, there is also a schedule called 11th schedule, and this 11th schedule has been added by the 73rd Amendment, that is for the panchayat. Now, for the panchayat, in the 11th schedule, you will find there are 29 functions that a panchayat can do. But in case of urban local bodies, they have given 18 functions. Now, are these functions new? Are these functions given afresh? No. These functions were not given afresh or not given new. These functions were all there in the state list 2 only. What the constitution did, they brought out some of these functions and said that these can come in the 12th schedule and the 11th schedule. But they have not deleted the functions from the state list 2. So these functions, you will find it is also there in state list 2, that is under the 7th schedule, and also in the 11th and the 12th schedule. Now, why it did not delete from there and brought it over here? Because this is a state subject. So the state will decide which functions to be given to whom. Now, this creates another layer of a confusion, another layer of a challenge for any expert or anybody working in a municipal area. Is that if you go to Calcutta Municipal Corporation, you will find that out of these 18 functions, they are doing maybe 17 or 16. If you go to, say, Mizoram, in Aizawl Municipal Corporation, you will find that they might be doing only 4. So across India also, this was not uniform because the state legislations are not uniform, and this devolution of functions has also not become uniform. But the constitution says there is a 12th schedule. Across my professional life or an expertise life over in this area, I have never seen that any corporation which is doing all the 18 functions. It's very hardly to find. Some corporations may be doing something more also. Like like Bombay Municipal Corporation, Bombay Mahanagar Palike, they also run buses, transport. Now we'll find from the next slide, the 18 functions, transport is not actually there, but they are doing so. Okay. Now these are the 18 functions. I will not go into the details because time won't permit to go into depth that what are these functions are all about. But these are the functions that a municipality at least must, as a minimum, must do: urban planning, including town planning, regulation of land use, like whenever we go and construct a building, we have to take a building sanction from a municipality. Now, a municipality will give us a building sanction, and that based on that, we will be able to construct our building or offices or whatever. But if you look at into some municipalities, this function is still done by the town and country planning department of the state government. So this function in those states, this function has not come, or this not has been devolved to the municipalities. Planning for economic and social development, this is an area which was set, but when they were preparing the master plans, the municipalities must consider the economic and the social factors also. Roads and bridges, yes, any roads and bridges that are being within the city, they are supposed to do it. But in some cases, in some states, PWD, the Public Works Department of the state government also does that. Now, if in any city a state highway or a national highway passes, then those roads or bridges will be under the purview of the state PWD or under the NHAI. So they are separate. So we are only talking about the city roads, alleys, gullies, and the narrow streets or whatever, the network, the arterial roads. Okay. Water supply, domestic, industrial, and commercial is a prime function of the municipality that they should supply water. But if you look into the case of Delhi, in Delhi the water is being done by the Delhi Jal Nigam. So again, there are differences. If you go to Chennai, also is a CMWSSB, Chennai Metropolitan Water. You go to Bangalore, it will be Bangalore Metropolitan Water Supply Board. But if you come to Calcutta, the water supply is with the municipality. So again, differences. Public health, sanitation, conservation, and solid waste management, definitely this function will be there because no state government department does this. So this is one of the function you will find common everywhere in across the country. If you go to Srinagar also, you go to Jammu, you go to anywhere, you will find this function. So that's why sometimes we jokingly used to say that what a municipal does, it only clears kachra. But it is not that true. I mean, they are given a lot of responsibilities now. Fire services, not all are doing, so they will be having their own fire engines. If you go to any municipality of Madhya Pradesh or Rajasthan, you will find the fire services are there, but not in other eastern parts. Urban forestry, yes, is a very important activity function, environment and ecological aspects. So nowadays the municipalities are taking a lot of care on the urban greenery. We call it urban forestry. Weaker sections, the slum people who comes to the city for looking for a job, for education and for medical, and so they stay back in the city without any proper parcha and the title deeds, etc. They create the separate world for them, but we cannot throw them out because they are basically the lungs and ears of our service system, of our house service system. There may be rickshaw pullers, there may be maid servants. So this category must be looked into. These are the weaker sections. Then the slum where they're staying that have given the basic amenities, facilities of water, sanitation, solid waste, etc. So that's a function. Urban poverty alleviation, a very vast subject, but very difficult to understand. Now, we all still know that in India, we are under a poverty level. So across the cities, wherever there's a poverty, there are poor people, there are street homeless people, their poverty alleviation must be done. So a lot of money comes, funds come for all these activities. Urban amenities and facilities like parks and playgrounds, street lights, etc. So these are their educational, cultural aspects that has to be maintained. So any city will organize this type of fairs, this type of cultural organizations, etc. Very importantly, the burial and burial grounds, crematorium and the crematorium for all religions and for all faith, this has to be maintained by the municipalities. Though in some areas you will find that these are maintained by some local trusts. Okay, now, but actually this should be under the purview of the municipality because this local trust doesn't follow the environmental aspects of the burial and the crematorium and the crematorium. So this must be handled by more expert hands of the municipality. Cattle pounds, stray animals, basically the stray animals, stray dogs, stray cattle, they has to be pounded and kept in a separate place, and they have to be fed and they have to be kept in a proper, so there is no disease breakouts also, epidemic breakouts also. Vital statistics include birth and death registration. This we all know. We all does that from the municipality. regulation and public amenities of street lights and parking lots and bus stops and street furnitures, hangout zones, vendor zones. So these all comes under these public amenities, and which are also the urban amenities, and the regulation of slaughterhouses and tanneries wherever there is a prevalence of flesh eating. So these animals are slaughtered, and they has to be done in a very scientific manner. Now, what are the impacts of the 74th Amendment? Just to run through. First, the 74th Amendment gave a lot of, influenced the local bodies because providing the social and the economic infrastructure. So that was the first thing, that they got a definite roadmap now to move ahead, the urban local bodies and also the panchayats. But 74th Amendment was definitely more for the is for the urban bodies. Now, second thing that happened is that the 74th Amendment gave all the powers and the functions and resources to the urban local, because resources is an important thing for the accountants, that where from the money is coming, and functions are also very important thing, that where they're spending this money. So all these became more definitive, more elaborated in the constitution. Now, as we all know that India is growing, and a large part of the growth is coming from the urban side. So definitely the urban scenario, the urban cities has to be remodeled, has to be look very good, so that the foreign investors can come, the city can grow, and we all tend to go to a city. That's our natural instinct. In any country you go, there will be an urbanization factor. People will move from the villages to the urban sides because of facilities. Like a place, I stay often is in Dhaka. You will find there is about 2 crore people staying in a very small place called Dhaka. And if you look into the countryside, they're all open, very green, very nice to stay. But Dhaka is just bursting. I mean, there is no place to move around also. It's so densely populated because all of people have come for education, medical facility. And this has happened across all the countries. Only definitely in European countries, we don't see that much of an urbanization, but any big city will have that problem. Now, obviously, globalization has opened up a lot of things. So cities are important. And as we all know, our GDP contributed, almost 50% of our GDP is contributed from the cities. The 74th Amendment also gave two very important things, which as an accountant must understand. First, it gave the authority for a state finance commission. Now, those who know about state finance commission very well, those who know about central finance commissions very well. Now, basically, those who don't know or have not gone through it, but just to tell you about, the Central Finance Commission is also a constitutional body. It is formed under the order of the president of the country. The parliament has got no role in constituting a central finance commission, any central finance commission. And this central finance commission, after its formation, will have a team, will have a committee, and that committee will have a definite role for, basically, this is a basic function to state out or laid down the principles of sharing of the central finances between the central and the state. So this is a basic, there are a lot of other functions. This is a basic recommendation that they must come up, that how the central finances, that is the central pool of money or funds, will be shared between the state and the center. So this is the Central Finance Commission. And till today, we are into the 15 Central Finance Commission, and very soon we will start the process of the 16th Central Finance Commission. Now, on the same line, the Constitution gave the constitutional status for the State Finance Commission, and a State Finance Commission will have the basic responsibility for stating or laying down the division principle of funds between the state and the local government. So this is the function of the State Finance Commission. So this is very important, that how the funds will flow from the state government to the local government. So this is the duty of the State Finance Commission. But unfortunately, as I have seen, the Central Finance Commission is very diligent in its formation and its recommendation that goes to the parliament, and then the parliament accepts that. But in the case of State Finance Commission, this has not been so across India. Some states have very well, progressive states have moved up. They have got all the State Finance Commission laid down, etc., etc. Some have fallen back, at a large distance. So they have not even formed maybe the third or the second, though this thing came in 1990s. Okay. Now, also Article 280 of the Constitution that inserted one particular amendment where the Central Finance Commission can also suggest improvement measures from the fund of the consolidated fund of the states. So that's another thing that the Central Finance Commission can also give recommendation for devolving financial resources with the local body. So this is one addition that has been made in the constitution. Now, what happened after that? The obviously there's a lot of autonomy of the financial resources. Now the local government can decide on their local resources, how they use it. Predictability became more important, because previously when the state government used to give funds to the local government, that is always used to be at the end of the budget year. And at the end of the budget year, maybe February or March, they're giving the money. And at that time, the local bodies have no option how to utilize the money. And as soon as the budget year ends, as per the protocol of our system, the unutilized portion of the grants goes back to the government, and the budget expires. So this became a problem for all local bodies. But after this constitutional amendment, it became more clear. The finance commission, wherever they give it in 3 or 4 installments. One installment should in the month of June, the next in the month of September, in January, and then March. Or so these become more predictable for the urban local bodies, or local bodies, to know that how much money I'm going to get from the state government, and based on that they can obviously plan their activities. Financial devolution became more structured, more definite by the 74th Amendment. Budgets became more realistic, because previously all local bodies used to have deficit budgets. Now, those who know about budgeting, a surplus budget means that your budgeted or estimated receipts are more than your estimated expenditure. Now, a surplus budget is never presented, because that doesn't show a good performance of any government, with the state, central, or the local body. It never gives a good, because that means the people will say, the citizens will say, you are earning more, you're spending less. So to counter that, all local bodies had a tendency of going for deficit budget. But deficit budget has got no meaning, because deficit budget, until unless you have the funds, where from you're going to spend it. But deficit budget became a norm, so everybody started publishing deficit budget. Now, the central government can go for a deficit budget logically, because they have a tool called deficit financing. That means if there is a deficit budget, then they can go for a deficit financing through printing of currency notes. Now, currency notes printing is not there for anybody else, the central government. So obviously, deficit budget is a bane. It's not a boon. It's a bane for everybody. But it became a norm. So that became more stabilized now in after the 74th Amendment, that the local bodies started giving more realistic budget, where it's a zero budget. That means, or a no surplus, no deficit budget. So that's more logical. That means I spend that only that much which I can estimated receipts can come. Now, also, the state governments and the local government have been given more power to levy taxes, user charges, and then they can go for the central government borrowings or the international aid. So local resources, financial resources, became more structured. Most important thing happened is that the local governments were allowed to go to the capital markets. Now, those who are interested in capital markets, they might know that the municipalities also issue bonds. These are called municipal bonds, and SEBI, Securities Exchange Board of India, SEBI, in a 2015 guideline, came with a strict norms and a principle that how a municipality can go for a bond issue. And over the last decade, so many municipalities have gone for a municipal bond. Now, municipal bond is a totally different topic for a discussion. We cannot do everything, but a lot of improvements happen. So now a municipality can also go to the bond market and get capital resources. Now coming to the accounting part, that's a moot point. I hope you can understand now why I have brought these things into the preamble of the discussion, that until unless you know a little bit of the urban local bodies, that how it is functioning in India and what they're doing, accounting becomes very monotonous. I mean, because accounting is a monotonous subject, debits and credits, nothing else, because that's the way I see how an accounting is done. And you are doing it for a pawn shop or for any corporate body, or Tata or ITC or whoever, you will have the same accounting entries. There is no change. And if it is for a government, wherever these double entry accounting principles are followed, you will find that. But what was the accounting structure of the local bodies? Let's understand that. And you have to understand there had been a lot of reforms been introduced in the local body accounting. So it is in a corporate accounting, you won't discuss about reforms, because that was there. 100 years back, that is still there. So there have been no reforms in accounting, only the way of reporting has changed. Previously, we used to do a reporting under Schedule 6 of our 1956 Act. Then it changed. Then now we have the IFRS, and then these accounting standards have changed. So all these reporting things have changed. But the basic accounting of debits and credits, that has not changed. Only the account heads may have changed. But in the case of urban local bodies, there had been a sea change. There's a paradigm shift, a conceptual shift of the accounting. So let's understand that. Now, if you look into the accounting system, the government accounting system, which is also called the GAS, GAS. Now, GAS actually covers the central government and the state government accounting. Now, the state government and the central government accounting is something different from the other government accounting. Now, central government and state government almost follows the same accounting principles, and they have a same accounting codes also. These are called the treasury codes. Now, it is through the basically the integrated financial management, the information system, IFMIS or IFMS, whatever. Now, this structure basically provides the accounting heads and how an accounting, and all account heads are same for the state government and the central government. Only some codes change, but the basic accounting codes remain the same. But the third tier government and the okay, I'm coming to that. The third tier government, the local governments, the ULBs and PRIs, that they are governed by the state governments, state legislation. So that's why as many state legislations were there, so many accounting philosophies were also there for the local body. So we had a very unstructured accounting policies, unstructured accounting scenario in the local bodies in India prior to the reforms that has started. Okay. Now, if you look at the central government and the state government accounts, basically it is compiled on the cash basis of accounting. Now, if you all know, definitely be knowing, cash basis of accounting is basically the recording of the receipts and the payments only. We don't go for any accrual entries. So first, the cash basis of accounting, where the receipts and the payments are recorded. So whatever is received and whatever are paid out, only that was recorded. Now, this is a philosophy for recording that. Why the government is doing that? Now, since government presents a cash-based budget, because a budget is what? Estimated receipts, estimated payments. So basically, whatever we will receive, we will pay out from there only. So the estimated receipts and estimated payments, or the actual receipts, actual payments became the philosophy for cash-based accounting. So still today, the central government and state governments follow a cash-based accounting, though our institute also has taken up some efforts with the government of India to make some of the units and some of the departments of our country to adopt an accrual based accounting. Now, that's a totally separate topic. Maybe someday our institute will explain that how it is being done or what is being done, because that's also an interesting parameter to understand in this whole ecosystem. But for the time being, we must concentrate that the government follows a cash based accounting system, and they follow a single entry system. Now, single entry system means what? Basically, they record only the real account or the personal account. The nominal accounts are not recorded. So who receives what and what is being paid out, so those basically are recorded. There is no recording of an asset. If a particular contractor is creating a 100-kilometer road, basically the payment system will say that X is the contractor and how much we have paid to X. But how much we have paid for the asset, that is not easily found out from the system. Though there are MIS report, but the accounting is not happening in that manner. So it's basically the real account and the personal account. I mean, real account also without the tangible real accounts. Now, the union budget and the state budget, whenever we call it, basically we call it a budget. But if you look at Article 112 of the Constitution, it is an annual financial statement. There is no mention of the word budget in our Constitution. It's annual financial statements. And what Article 112 says, that annual financial statement should be presented before the Parliament or the legislature on a particular date or on a particular time frame, and it should give the actual for the last year, the estimated for the next year, and the revised estimates for the current year. So basically, there are three columns: the actual that will be audited by the CNAG, the estimates, the estimate for the future year based on which the receipts and payments will happen, and the revised estimates for the current year. so that one can compare that what is happening in this year. So this is the statement, and this is called an annual financial statement. You can download any annual financial statement of the state government or central government. You will find the same account code, same logic, same way of preparation. Okay. So this is the union budget and the state, and the union and the state accounts. But the third tier accounting, as I said, was very complicated. Now they all followed as the state laws said, and everybody followed everything. There was no uniformity prior to 80 and 90, because that from that period only the reform started in the accounting, in the urban accounting scenario. They were all following the cash basis of accounting and all following the handwritten manual cash books, handwritten manual subledgers. So there was no computerization, there was no system of reporting. Only the cash book used to be presented, and the daily cash balance is to be checked, and the commissioner or the executive officer is to sign, and the accountant is to sign, and that's all. That's that accounting. So that's used to be presented before the audit also. So basically, the cash book was the major focus, and that's why the cash basis of accounting. And only objective was to prevent defalcations, prevent any corruptions, etc. But the accounting and whatever we understand about accounting, that was never considered as an important. Now, after the 74th Amendment came, all state government redrafted their laws. I mean, those who had more or less same laws. In fact, after the 74th Amendment, Union government gave a lot of help. At that time, the Minister of Urban Development helped the state governments to by providing them a model municipal law that one can adopt. So many states have adopted that. Many have adopted or amended their old legislations. So the state laws became more uniform now, but they're still different, but more uniform now. But the state laws have adopted the accounting also. Some state laws have adopted that, like I will say Bihar is one of the pioneer state in the country where if you look at the Bihar Municipal Corporation Act, it holds the best of the lot provisions for the accounting, audit, internal audit, stat audit, etc. Engagement of chartered accountant firms. So Bihar is one of the pioneer states where this has been done, but it won't find it in other city or in other states. The first push from the union government came in through the 12th Finance Commission, where the 12th Finance Commission, that's soon after the 74th Amendment happened. It's between 90 to 95, the 12th Finance Commission. And then they said that all municipalities must migrate to the accrual-based double entry accounting system. Now, that's the more modern method of accounting. Now, at the same time, during 95, after 95, basically between 95 and 2000, there was a famous case which was heard by the Honorable Supreme Court, and that Supreme Court gave a decision that the case is also called Almitra Patel case. Now, that's very interesting case to just know about. I mean, you can Google search it, but just to give a one line, two line on that, Ms. Almitra Patel was a resident of Delhi. Now, she complained before the High Court, Delhi High Court, that the Municipal Corporation of Delhi at that time, it was a unified Municipal Corporation of Delhi, which was again broken into three, now again unified. So at that time of municipal MCD, now they were told that, why you are not clearing the roads or the streets of the solid waste management, which this madam complained. Now their reply was that we don't have any money to do so, so we can't do very regular cleaning. So the High Court said that please bring your balance sheet and your other books of accounts. So we want to see that how you don't have any money. At that time, the answer was that we don't have any balance sheet. We don't prepare any balance sheet. Now, this was a trigger point. Now, when it was said that no municipalities across country prepares any balance sheet, because that is not in the law, we follow this type of accounting. So then it went to the Supreme Court and it was heard, and the CNAG was involved, ICI was involved, and they all brought in and said, yes, it was not there. So in this decision, the Honorable Supreme Court ordered and ordered CNAG to create a task force to come up with suggestions for a uniform what we call accounting across India for all municipalities. Panchayats were never covered because this was a decision of the High Supreme Court for the all municipalities. So CNAG formed a task force in 2002 with our members also of the institute, and some experts were there, and CNAG, Deputy CNAG and other officials were all there, and they all came up with a manual, and that is called a National Municipal Accounting Manual, and that's one of the first step these reforms, starting the reform process. And this National Municipal Accounting Manual came out in 2004, but it was not made mandatory. It said the state government must adopt this manual, and it is a guidance. It's a guideline sort of, because again, the central government cannot direct a municipality to do something. It can only advocate, because of the constitutional divisions of the seventh schedule. They only advocated the state government. So some state governments have adopted the NAM exactly in the manner. Some have adopted in a little modified manner to make it more relevant for the own state. Some states are yet to adopt, and very few are there, but some states are yet to adopt. I won't name them, but some states are yet to adopt the manual in that manner. But again, this was a compulsion, and this compulsion also came out in some of the central finance schemes. Like the first was URIF, Urban Renewal Improvement Fund, URIF, which was between 1999 and 2004. That government, the then government of 1999 2004, started this, and that URIF program had said that if you want to access some money, you have to make some reforms, and some reforms were given, but not in a very big manner. Between 2005 to 2012, when the then government came up, or basically progressed with the URIF, they bring up the JNNURM, the Jawaharlal Nehru National Urban Renewal Mission, and that had a lot of reforms for accounting. And you have to adopt that double entry accounting, you have to have computerized accounting, all states must adopt the manuals, and so on and so forth. So these become, if anybody has to access the JNNURM fund, they have to do this. But the problem with JNNURM and this adoptability was that it was initially for 63 cities only, and then it was increased to some more, but it became a city-centric, not a state-centric. So that was some problem. Then came the Amrut and the smart city, and also that became a city-centric, though a little larger number of cities were covered, but still it said that you have to adopt this. Now, basically, as no state government could adopt any changes, any accounting changes or any legislative changes, only for one city or two city. It has to be a statewide. So obviously it became a statewide. But from the 13th Finance Commission onwards, 13th, 14th, and 15th, it became a statewide approach. That means the entire state, all local bodies must be covered. Now, in all these 13th Finance, 14th, and 15th Finance Commission, everywhere it has been said that you have to improve your accounting structure if you have to access the funds from this Finance Commission. So that was made mandatory. And also, those cities which went for international loans from World Bank and ADB, because they are very strict, they are very rigid on the accounting part, because they are giving an international loan, a dollar term loan, that must be reflected in the books of accounts. It cannot only be in the cash book, so it has to be reflected somewhere. So they became mandatory. Again, this happened. Okay. Now, so the existing system, as I said, I won't go into the definition definitely. The single entry accounting system, which is only the recording the cash and the personal accounts, and the cash-based accounting, only recording the cash receipts and the cash payments. So this was the system existing, and the faults that were definitely identified, we all understand the faults, that it is an incomplete set of accounting records. There's no records of assets and liabilities. You cannot prepare an income and expenditure account. You can only generate a cash book. You cannot prepare a balance sheet. There were no knowledge of receivables, payables, borrowings, anything. Audit used to give paragraphs, and every audit paragraph is to become a year centric. That means 1 year it is given, forgotten, because it is the accounts are not carried forward. Only the cash balances are carried forward. So that was a problem. But the audit never dropped any paragraph until unless it has been resolved. So this became the accumulated accounting paragraphs. Okay. Obviously, this accounting system had lack of transparency and accountability and good governance, and that information base, MIS, which we call the management information system, was lacking. And most importantly, there was no costing of services. Whatever tariffs were levied or user charges were levied, they're all ad hoc. It is not backed by a cost statement, that what is a delivery cost or cost of delivering that service. So that was never understood, because such records were not there. But once this double entry accounting started, so now people have taken certain interest in the costing of services also. And definitely internationally, all municipalities or municipal corporations of Newark or Sydney or Chicago, they were also under a single entry cash-based system initially, but they also found, and they started moving in. And obviously in international parlance, international countries, these things happen much quicker. In India, we take a lot of time to implement these things, and they're still going on. Now, so obviously, why we are going? We are going to the double entry accounting system. As we all know, a double entry accounting system records all transactions the two sides of the transactions. And as I say, or as I look at it, any transaction will have a benefit giving effect and a benefit receiving effect. So both these effects has to be recorded. And some used to say and ask the question, double entry, what do you mean by double entry? 2 times you have to record. So that's why I said, no, it's not a 2-time recording. It's a single recording of the transaction, but the two aspects of the transaction will be recorded. Accrual based was a really new thing because it created a layer of accounting, because previously they were only recording for the receipts and payments. Now they have to record for the demand and the payable also. That means a step back to the receipts and payments. So this created an additional layer of accounting for the accountants of the municipalities. Now this was a challenge, because that came up from them, that we are doing more work than before. Yes, accrual based definitely creates another layer of accounting. Okay. Now we all know benefits of double entry. It's a full complete record of each transactions. Then transactions recorded in a scientific manner. We can prepare a trial balance. There will be an arithmetical accuracy. We can check it from the trial balance. You can prepare an acceptable formats of the financial statements. Assets and liabilities are known. Now I will just give you an example what happened in some cases, like in Kolkata when we were working. Suddenly, when we are listing the assets, we came to know there is a 300 bighas of land, which is basically a barren land, but used for brick factories. And the bricks used to come to the Calcutta Corporation for their own construction activities. Now, these 300 bighas of land, which is there outside the jurisdiction of Kolkata, it was on the banks of the Ganges, because then only the brick kiln can come up. Now, this was never recorded and this was never known. So now, once this effort was initiated, so all these assets were brought into the fold of the municipality. So assets and liabilities, like in some municipalities, like say, which I visit, like Bhopal and Indore, they have their zoos also. The municipalities run their zoos also, if I remember correctly. And these zoos will have animals and birds. So these livestock should also be considered in the balance sheet. So this is the financial reporting, that what you want to show in your financial reports. So again, I mean, as I said in the very first slide, or the beginning, this accounting is still the debits and credits, but what you are debiting and what you are crediting, that's most important to understand. Okay? Definitely, it brings transparency in the accounting system as it is built on the internal checks. Now, more benefits. Revenue recognition became more certain, because now whenever a demand is going for a tax demand or user charge demand, then only we pass an accounting entry for the revenue recognition, and it constitutes both the revenue received and receivable. Expenditure recognition also became more confirmed. Then there is a matching of expenses and income, and there is a clear distinction between capital and revenue transactions, because that was not known to the people, that everything was cash book. So whether it's a capital transaction or a revenue transaction, capital receipt, capital payment, or a revenue receipt, revenue payment, these concepts were brought in with these reforms. Full costing was possible, and then the other cash management, fund management, budget controls were there. Now, basically, in a financial statement or in a financial reporting, you will find that these are the revenue side of the municipalities. The tax revenues will include property tax, octroi. Now, I have marked octroi. Now, by the introduction of the GST Act in 2017, this octroi and many local body taxes were subsumed under the GST Act. Octroi is my mistake. I have not marked advertisement tax also. Now, advertisement tax has also been subsumed under the GST Act. So now, octroi and advertisement tax cannot be an income of the municipality. They can charge in some different way, but octroi has totally been abolished. Previously, Pune, after abolition of octroi, Pune and Pimpri Chinchwad Municipal Corporation of Maharashtra used to levy a tax called entry tax. Wherever a lorry or a truck is to enter the municipal jurisdiction, they used to collect a money. That's the entry tax, because they are bringing some goods from outside. So the lorry to pass through the city boundaries, they must pay a tax. So these have been abolished wholeheartedly, and obviously this is to create a lot of traffic since at the nakas also. So now only you will find the tolls of the bridges, not the entry tax things. But advertisement tax was a very important tax for the municipality that has been abolished and that has been subsumed in the GST. But other taxes are there. Under the non-tax revenue, we'll find the user charges, the fees. Like user charges means like say I am giving my kachara to the solid waste management, so they charge a fee, maybe 30 rupees, 50 rupees a month. Then some municipalities charge a fee on the street lights that they glow in the evenings. Then there can be charges for parking. Then there can be charges for entry fees in a park or a playground, etc. So these are the user charges. There are certain fees also, like building sanction fees. I want to get some services of the municipality. For birth registration, death registration, it is free for 21 days. Then after 21 days, if somebody wants to go for a registration, they have to pay a very nominal fee. So these are fees. That means you pay something and get something. Sell are always there. They sell their grasses, they sell their old things, they sell anything. So tender papers, etc. These are the sale item. Other receipts include recoveries, lapse deposits, fines, forfeitures. Next are rents. Rents are a very important thing. Municipalities have a lot of assets that they hire out, like stalls. Some municipalities also hiring out their equipment, like JCBs and road rollers. So they own this, and then when small contractors, road contractors come, then they hire out these JCBs and road rollers to them. So this brings some income to the municipality. So these are innovative ways they have started earning, and these were allowed only after the 74th Amendment happened. There is another revenue head called the assigned revenues. Now, some revenues are collected by the state government, and there is a legal provision of sharing these revenues by the state government with the municipalities, and these sharing principles are actually given under the State Finance Commission. But as I said, the State Finance Commissions are not uniformly implemented across India, so it's a problem. But what are the types? Basically, the entertainment tax. Some state government is collecting entertainment tax and sharing a part of that. The entertainment tax are basically the taxes from the films, amusements, or theaters, or fairs, etc. So these taxes, like in cities where cricket matches are held or any public gatherings happen, the basic services of water and sanitation are provided by the city government. So they collect an entertainment tax on those events. Some movies, sometimes we will see that those things come out very vividly in the newspapers, that some governments have exempted entertainment tax on certain special movies, some historical or national movies, so they exempt that. So why exempt? That means they are not going to collect that entertainment tax on that. But since these facilities are within the city and the city governments are responsible for maintenance of that, so that's why the cities are given a share of the entertainment tax. Then a stamp duty surcharge, because whenever a transfer of immovable property happens, the municipalities have a role to play. Profession tax, motor vehicles tax, because motor vehicles tax is collected by the state government. But since motors are run on the city streets and the city streets have to be maintained by the city governments, that's why a share of the motor vehicle tax also comes. But it is again not uniform across all states of the country. Then they receive grants. A lot of grants come from various projects, from various governments, etc., etc. Plan, non-plan. Nowadays, we don't call it plan grants and non-plan grants. Now it's all revenue grants and capital grants. So plan and non-plan concept has been abolished by Government of India in 2016-17. So from 2016-17 onwards, if you look at the union budget, you won't find there's a plan budget and a non-plan budget. So that concept has gone. It is all capital receipts, capital payments, revenue receipts, and revenue payments. So more accounting type. Then the loans, definitely. The loans come from state government, the HUDCO, LIC, banks, municipal bonds, etc. etc. These are all loans, and also the international loans. The expenditure side of the municipality is much or less more regular, like in a corporate. They have all those expenditures because expenditures are more or less common. But some expenditures definitely are different. Staff salaries are common, rents, rates, taxes, office maintenance. Then comes the operation and maintenance. Now, this is different because operation and maintenance is for the service assets like water treatment plant, sewage treatment plant, roads, street lights. So these has to be maintained and operated, and for that the nature of expenditure is different. But again, I would say the debits and credits remain the same, whether it's a corporate or a urban local body. Then the capital expenditure definitely is a different type of capital expenditure. We'll have water supply assets, we'll have sewerage assets, we'll have roads, culverts. And these assets should be classified because all roads, all bridges are not same. Because you will find there is a road over bridge, that is also an asset. There may be a road under bridge also. So that is also a road which sometimes used as a parking lot, sometimes used as a gardening spot. So these are also to be accounted for, and this has to be taken as a fixed assets register. Then tools and plants, etc., etc., and other expenditures definitely which is not covered. So these are the type of receipts and expenditures, or the income and expenditures, that we see in a financial reporting. Now, the reforms, how it happened, definitely World Bank started the reforms in the 80s and 90s, and they very judiciously started with the three municipalities which were the oldest municipalities, Mumbai, Kolkata, and Chennai. And that was a starting point when, under the World Bank Technical Assistance Program, they started modifying. And today, Kolkata, where it is standing, or Chennai, they have got a lot of benefits. Now they're preparing the financial statement more diligently. Then between 1995, just after the 74th Amendment, then again World Bank took for some cities in Gujarat, and between 97 and 2001, Tamil Nadu started for all the municipalities of the state. Then it happened more regular, because by that time, this Almitra Patel, by this time, this Finance Commission, the 74th Amendment, this NAM and CNAG, etc., all these have happened. So after that, these have become more common and more frequent reforms. Initially, it was all the pilot works in Karnataka, in under ADB, in Anand, Jaipur, and Tumkur, Andhra Pradesh under DFID program, Bhubaneswar under USAID, then again Kolkata under DFID, 14 municipal corporations in Madhya Pradesh, 28 municipalities in Bihar. Now it is across all the states. I mean, all municipalities are being covered. In Bihar, it is covered under the 260 municipalities. And then the Northeast got some funds from the ADB, Asian Development Bank. They did it. Kerala did it under ADB funding again. Some states definitely took up those things under their own. But now more states are providing their own funds to develop. But definitely funding is scarce, so things happen slowly. Now, the financial reporting, how it all brought into this reporting part. Now, to understand reporting, please go through the NAM. Those who are interested in this subject, those who are interested in this sector, in this topic, this NAM, the National Municipal Accounting Manual, is easily available on the web. Just Google search it and you can download. It's a voluminous document, 800. You look at the preamble, you will find a lot of similarities what we have discussed today. That how it happened, I mean, why it started moving, etc. Now, so NAM has been adopted by the states, and it's a comprehensive accounting manual, and it's a voluminous, as I said, voluminous manual. Sometimes we used to get lost that where to start and where to end, but it covered all accounting entries, all aspects, what are the types of transactions that can happen. So it covered many things. It gave a lot of principles also and policies also that should be adopted. Now, basically the principles and policies of a municipal accounting. Now, we cannot follow the accounting standards which we normally see, or which cannot follow the IFRS. Now, also the GASB, the Government Accounting Standards Board, the GASB also come up with accounting policies, but GASB's accounting policies more for the central government and the state governments. They are not for the local government. Also, if you look at this, GASB is an Indian board. And if you look at the IPSAS, the International Public Sector Accounting Standards Board of UK, now they also come up with generalistic government accounting standards, but we have not, except in the case of GASB, we have not adopted IPSAS fully, but we refer to IPSAS. And based on the IPSAS, our institute has come up with the accounting standards for local bodies. Now, I will come to that later on, accounting standards for local bodies. I have my personal views on that. I will give that view, but that is separate. But IPSAS is also there. So, but the National Municipal Accounting Manual gave more systemic accounting policies and procedures. They defined all the definitions, gave all the definitions, and very comprehensive. One can look at it, but it was in English. So this was another problem, that many municipalities could not immediately adopt the English manual, because, as I said, it's a voluminous document, and it had never had a vernacular version. But states have developed, again, the states, those who have more or less copied from the national manual, they also went for an English version, but it's difficult to find a vernacular version. So that's why the acceptability and the adaptability of the manuals always a question. Now, I'm not debating between a vernacular version and an English version, but English version definitely is easier for anybody to write and draft. But a vernacular version is always easy to understand and accept. So there's a gap between that. Now, the manual was developed that all users of accounting should use that. And if somebody is developing a computerized accounting, so they must use the guidelines given by the national manual. So maintenance of accounts became an issue under the DES, as it's a two-way shift now, because once the manual came and then once all these reforms started happening, all became more or less mandatory. That means you have to do it. So it's a two-way shift from the traditional accounting system, the cash based to the to double entry. NAM definitely highlighted that how the state going to do it, what are the intricacies of the new system, how to develop the conceptual frameworks, and what benefits to be brought in. So NAM gave all these things. Now, the first thing that when this migration started, let's say migration started, the migration from the old system to the new system, there has to be a cutoff. Otherwise, this migration never happens. Now, I mean, in our college days, our university days, we used to have a chapter called conversion of single entry to double entry. There was a chapter in accounting, single entry to double entry. That means a very small business is following a single entry system of accounting and he wants to convert it into a double entry. So if you remember, those who remember their college days, and if I remember my school college days clearly, there is to be a first thing that we used to do in those problems, these accounting problems, is to prepare an opening statement of affairs. Opening statement of affairs means what is the assets and liabilities on the opening date, because that's the starting point. Now, the same philosophy was brought also over here. The statement of affairs is now called the opening balance sheet. So, what is the opening balances from the previous part or from the previous regime? Now, this is the most critical thing to do, because previous regime, we hardly have any records. We hardly have any documentation. Then how we can say what are the balances? So this become a challenge of of determination of the balance of the fixed assets. What are the assets there? What are the say chairs and tables? What are the factories or whatever, the roads, whatever? So it's a huge task of identification. And obviously with that, the valuation, because the logic was why we go for an opening balance sheet. We identify the assets that will be on the asset side, and we identify the liabilities that will be on the liability side. And we use that age-old formula where capital is equal to assets minus liabilities. So we'll get a capital. So basically the capital in case of a corporate, but here we'll call it a municipal fund. So we will determine the municipal funds to start with, and that's the opening balance sheet, and then start the basic double entry of debits and credits using those account heads which we have identified in the balance sheet. So this was the basic philosophy of the conversion. But the opening balance sheet preparation was really a tough task, because physical identification of each and every asset was an inhuman task. And many municipalities have lost records. Their records may have burned. Their records may have stolen, whatever. Many things have happened. There are a lot of stories behind those. But whoever were the experts, and some obviously very involved municipal officers, they went out, collected information, uh, used their institutional memories, called some old employees, took out the records, and we did it. But the problem came, identification was happened, but what about the valuation? Because we are following a historical cost method, because that's the way we in India do. We don't go for a replacement cost or a market value method. So historical cost, where from going to find a historical cost? Say in a Kolkata, we found assets which were acquired in 1880s or maybe beyond that. There were assets, gifted assets by Netaji Subhash Chandra Bose. How are we going to value them? So difficult. So this was carried to the ministry, and then the ministry in 2009 came up with this model national municipal asset valuation methodology. So another methodology or a valuation model was given. Now I don't think this will be available in the net, because I you may try it, but I did not get a copy of that. But this was there, and this particular manual gave the very vividly gave the very principles that how the valuation should be done. Now, it defined the category of assets, because category of assets will be different from a corporate and from a government asset. So there is a categorization differentiation. Then the general principles of valuation for opening balance sheet, how ongoing assets, capital work in progress to be valued. What are the techniques of valuing a capital work in progress? When it completes a defect liability period, then it is given over to the line department, how it is done, what are the issues, challenges faced. So all these are given this particular manual. Now, definition-wise, the manual asset, because assets is the most critical part of the of financial reporting in a municipality. Now, IPSAS-B were referred to IPSAS-B's definition. Also, as I said, this manual was also a model, and all state governments have to adopt. And most of the state governments adopted this manual because there's very hardly any difference of opinion in these valuation principles. Okay, and the assets were categorized as infrastructure assets. Infrastructure assets means the assets which are bringing out services. So that's the infrastructure assets and the other assets. Now, there are simple formulas or simple requirement principles that has been said that assets should be initially valued at the historical cost, and then you just go on adding them if you're adding the assets. Depreciation should be charged on a written down value method. It's not a straight line method because these assets will always, in a government setup, will always outlive their economic life. So these assets will be carried over for the years over years over years. So a simple straight line method of depreciation will not be advocated. So a written down value method or a diminishing balance method was advocated. Revaluation of assets can be done, but only on certain terms and conditions. If we are going for a bond issue, and if you have to show a good value of capital funds, so you have to create a capital reserve. Now, how it is to be done, where you should post it, these are all covered. Now, any assets which are donated or given, and for which we don't have any idea what is the actual cost, the valuation methodology manual said, please value it at rupee 1. So that's the nominal cost, but don't throw it out of your books. You show it in your books, but show it at one rupee. Now, this was done because, see, this is the picture. You can see the drains are being measured because this width of a drain also categorized as asset. Drains can be of many size. Now, assets should be categorized by their shapes and size and categories, because a drain of a say of 2 meter or a 3 meter or a 10 meter drain will have different water holding capacity. So their cost will be different. Their life will be different. So all this has to be technically from the engineers has to be correlated, and this categorization has to be done. So for that, a detailed survey of the city is very, very important, and involving junior engineers, junior people is also very important. Now, just a few pictures that this is the way the assets are being in one of the municipal assets are being tagged, marked, and then put it in a fixed assets register. In some cases, we use GIS technology also of putting the assets. These are the infrastructure assets and office assets. Now, this is another asset which are like temples, or which are like, say, historical assets also owned by the municipalities, but it's totally inhuman to value a historical asset. So what we did is that you record that asset under a category and you mark it 1, because these historical assets will never be sold. So there should not be any capital market value of that. I mean, there's no point in creating a market value of a historical asset. So that, and again I said, there were livestock also. So livestock assets are also important, and livestocks, that these animals will produce babies, and these babies will also become the ownership of the municipality. So then again, these are basically free bonus shares that come. So these also have to be valued by some manner. So these are the principles one has to develop. I mean, we chartered accountants have that acumen. We learned from our courses that how to develop this. So this was done. These are the water supply assets, and the water supply assets and infrastructure is very complicated because these have got all types of combinations. There will be an electrical part, there will be a mechanical part, and there will be a civil part. So all these, if you club together, we call it a consolidated asset or a combined asset. In some cases, we segregate. The land for the water supply treatment plant is kept separate. The building is kept separate. The mechanical part is kept separate. The electrical part is kept separate, because the rate of depreciation is different in all cases. But if it's a combined asset, I can't segregate. I don't know. I mean, what are the divisions or demarcations? So we can have a combined asset. Now coming to the accounting standards. There are certain accounting standards given by our institute. Now, these accounting standards were necessary because I fully agree with the necessity of accounting standards, because in India, as I said, the municipal manual, though it's a uniformly modeled, but states have adopted differently. Now, obviously, it becomes difficult that if you don't have some standards, then what you are reporting in the financial reports is become little wayward. I mean, everybody starts reporting something different. Now, so accounting standards are necessary, and that's most important. Now, as you would be knowing, or if you're not knowing, that there used to be a committee called Committee on Accounting Standards for Local Bodies, CSLB, and it was constituted by our institute only. And this is a time when this National Municipal Accounting Manual (NMM) has just been launched. So immediately the institute thought that there has to be some accounting standards, and the CSLB was formed. Now, as I understand, there's another committee of CP and GFM, that the committee which is organizing this particular session has been merged with the CSLB, and now we have a single entity. But the accounting standards for local bodies were issued by the institute. Now, this is a list of accounting standards. Now, this is my personal view, I'm saying. I mean, I don't want to be quoted anywhere, but the problem with the implementation of accounting standards for local bodies in India is that now, since institute is a central body governed by the parliament of our country, now whatever we have been prescribed under here, the state governments are not adopting them, because these urban local bodies, is municipalities, a state subject, and these state governments have their own accounting understanding, their own accounting, say, state municipal legislation. So that's why the adoption of these accounting standards is absolutely nearly zero in municipalities, the municipalities which I'm worked with. Now, please don't take it me otherwise, but this is a practical problem I'm just upholding. I know I'm talking on behalf of the institute, so I should not be critical on the institute's part. But anyway, since there's a practical thing I'm saying, now what has happened from 2023 or 2023, probably 1st April 23, most probably, is that the institute has given a direction to the members that whoever is auditing a municipal body's financial statements, they must follow whether accounting standard ASLB 2 and ASLB 5 have been complied with. So this is a responsibility given to the CAs who are auditing. But again, don't quote me otherwise. This responsibility has not been given to the accounting of the ULBs. So now it's the responsibility of the members to certify or input in the audit reports that whether ASLB 2 and ASLB 5 have been complied. Only these two. That's why I marked in it. But if you look into all these ASLBs, they are very comprehensively drafted. They're very good. I mean, referred from the Ipsos, etc. So they're very, very good. But the problem that I suggested, or that I said, is that acceptability at the local body level, until unless the states realize the importance of these ASLBs and take into their legislations in concurrence with the CNAG, because they will be auditing the accounting, the books of accounts. So it will be a difficult path, or to be a long path for an implementation of SLB. Also, there is one guidance note, the last guidance note, accounting for investments for local bodies, marked in red. This has also been made mandatory for reporting by the CS. Now, I am not going through the list of these ASLBs. I think there can be some more ASLBs also. I have listed it from the website of the institute. One can refer to the institute's website and see what are the ASLBs till now. And these are all available in the website. One can refer them. Now, the annual financial statements obviously will consist of a balance sheet, an income and expenditure statement, a cash flow statement, a summary of which is the cash flows. Now, this is basically whatever cash flow statement we use in a corporate reporting, the same there. Then there will be a receipts and payments account also, because this is important. Usually, we do not present a consolidated cash book for a corporate body because there's no need for that. But in this case, there is a need for the receipts and payments to be presented and audited because the budgets, any municipality which is preparing, they are based on the cash-based accounting. So budgets can never be accrual-based, because accrual-based budgeting had been tried in a few municipalities across the world. Like in New Zealand, it had been attempted. In Australia, it had been attempted, but it became difficult because actual-based budgeting is difficult to forecast. Okay? So obviously we are still following the cash-based budgeting. And for a cash-based budgeting, it's important to have a receipts and payments account ready, because then only you can compare the actuals and the budgets of the previous year and do a variance analysis. Okay. Then the notes to the accounts and accounting policies are adopted, and then some there are KPIs also, key financial parameter indicators. Now these are available. Like we have a working capital ratio, we don't have a profit ratio, but we have a working capital, a debt equity ratio, debt capital ratio, how much debts they have borrowed. So maybe some turnover ratios are also there. So how much you are earning on, how much each employee is earning for you, how much you're paying for the citizens for every head. So these are some key financial performance indicators are also there. Now this is an example I'm just showing, just an example. Please don't ask that from where I've got it, but these are there. So this is basically a cash flow statement you can see of a particular municipality. They are preparing it in operating cash flow, investing cash flows, and exactly in that manner. So this is an operating cash flow part. Now another part of the cash flow. So, I mean, you can see now we have the opening, I mean, the previous year figures, current year figures. So these were all not there prior to, say, 90s, more so prior to 2000. So these changes have happened. Now, if somebody says, kya hua? But many things happen. So at least we can have a discussion on this today. Okay. Yeah, it took time because these type of reforms doesn't happen so quickly, but definitely if the state governments had been more proactive, and some more thrust and push has come from from other sections, this should have been done much earlier, but we are still hoping that this will happen. Now this is a picture of a very small municipality in the northeast of Aizawl Municipal Corporation. Now you can see how they're preparing a balance sheet. Now please don't look into the figures, because figures is not important. You might find there is a negative liability in the, but these, at least they have started doing this. Now I will come that why there's a negative liability. Now these are the challenges that was there, but you can see now the municipal fund is there, that is coming up. So we know how much is assets, how much is accumulated depreciation. Now these, I mean, 10 years back, 15 years back, this was unthinkable. It was not there. Okay. Now they're also preparing the schedules like we all do. So these are all there. Now the common challenges that we faced in the financial reporting is that, say, whenever we are doing the current year accounts, we'll find that the closing balances were arriving, and the closing balance on a back calculation, what should have been there in the last year's accounts, they are not matching. Now, it may happen that the opening balances that has been taken taken for this year, which is the closing balance of last year, will have a wrong or impacted balance in the previous year also. So this is the problem of the opening balance sheet. Because in the opening balance sheet, when you started, we just went in a dark tunnel and started pulling up figures from here and there. Now, we never knew that, what we are getting. So something came, some missed out. So this is a challenge, and this challenge everybody knew that's going to come. That's why the manual has a separate account head called adjustment to opening balance sheet. So if these type of mismatches comes, you won't find this in a corporate balance sheet, because in a corporate balance sheet, if you use the account head called suspense, we will be killed. We will be taken to jail. But in case of an urban local body, this should be allowed. And please remember, those members who are here, if you are doing an accounting, please don't wear your audit cap, because audit hat and audit umbrella will not take you any way further in an accounting assignment in a municipality, because we are accountants there. So we will be accounting. If you ask too many questions and do an audit and a scrutiny and an investigation, no municipal officer will give you any data from the next second onwards. So please understand that we are an accountant. We have to make them understand that what we are doing and what is the benefit of accounting that particular figure or particular transaction. Then only they will understand, then they will give. But if you start questioning why it is 2 paisa less and why it is 200 rupees more, they will stop giving that, because these are government officers, one need to understand. And they are at their liberty, because they were practicing this for ages. So we have suddenly gone to change them. It's so difficult to change them overnight. So this takes time. So definitely the manual has given all these allowances. Go for this thing. Grant balances, the balances which comes as a grant, which is shown in the liability side, these grants will have special bank accounts for them, because it's a rule that all grants do come. For each grant, you have to open a separate savings bank account, not a current account, savings bank account. Because savings bank account, you will get some interest out of that, and that interest will be utilized for the grant maintenance also. Now, it many times happen the grant, what is unutilized grant shown in the liability side, the balance, the physical balance in the bank, they are not matching. Now, there are many reasons for that. It may happen that some expenditures have happened which are not under the grant. They have been paid out of that bank account, because municipalities face cash crunch, and whenever somebody sees 5 crores is lying in that account, somebody may have ordered that you pay it from there. We will see later on. And that later on, that person may have been transferred and nobody saw, and it became a problem, accounting problem. So these things will happen, and this is a challenge to reconcile the grant balances with the physical balances in the bank. Now, also, whenever you're recognizing the income, you have received the income, you will find expenditure out of that grant is much more than that. Now, it may have happened, expenditure from some other grants may have crept in, so that can happen. Some non-grant expenditures also have crept in. So these are the accounting problems one need to see. So these are the challenges in the financial reporting. Statutory liability showing debit balance. As I said, you have paid more, you have recorded less. It can happen because you have not shown the deduction from TDS or anything, but you have actually paid to the authorities that much money. So the reconciliation of the TDS challans and TDS returns, other statutory duties, the GST TDS are very, very important. So it's not only accounting part, it's also reconciliation. Valuation of fixed assets, I've already said, it's a big challenge. Old records lost, intentional, unintentional. Many times we have found intentionally cash books have been taken away outside the municipality, and they were no way to be found. Now you can understand why somebody will do that. Unintentional, there can be fire, there can be rats, rodents, rains. They have destroyed the cash books. We are working with old cash books. They may not be there. And also, this challenge also we have seen, it's too much consultant driven. That means it is the headache of the consultant to prepare a balance sheet, and it's the least botheration of the ULBs. So this is one of the major problems that we have seen, the challenge, because there is a lack of interest in the whole process, because these are not, sometimes it's not statutory, except in the case of Bihar, as I've said. In Bihar, it is statutory, and that's why it's happening more regularly. Now coming to the taxation part. Now, before I go on to the taxation, it will be a short session. Taxation, I'm not as you can understand, not a taxation expert. Yes, I definitely used to practice taxes, income tax, before my migration in 2004 into this sector. But nowadays, I hardly practice anything. But GST is definitely a very white elephant for me. It's a very complicated act. But still, whatever working with the ULB I have understood, I will just run in brief. But you are maybe all tax experts. You please go through the details. I'm just pinpointing, just flagging that these are the sections or these are the areas that one need to put into more interest. Now, section 1020 is a very important section for anybody to understand. It's an exemption section, definitely. Section 20 says that or exempts the income of a local authority. So income of a local authority, whatever income they're earning, that is exempted. If the income is income from house property, if it is a capital gains, if it is income from other sources, or from trade or business. Now, income from house property, capital gains, and income from other sources is fine. There's no problem in that. You all know what type of income comes. So that is there. So that's why the rental income, which is a house property income, that's also exempted. But in the case of trade or business, there's a catch. Please note the language or interpret the provision. In the trade or business, it is saying that if it is carrying out trade or business within its jurisdiction or service, not being water or electricity. That means from the services, if you take out water and electricity, so any services which is within the jurisdiction, it is exempt from tax. But if you are taking that service outside the jurisdiction, it is taxable for the local authorities. No more exemption is there. But in case of water and electricity, if the services is within the jurisdiction or outside the jurisdiction, it is exempted. So in case of water and electricity, if it is within or outside, there is an exemption. But in case of services, if it is only within the jurisdiction, then only it is exempted. Otherwise, exemption is not there. So therefore, any services provided outside jurisdiction area, obviously the services, not the water electricity, is chargeable to income tax. Now, what is the definition of local authority? If you look at the definition part, it includes panchayats under Article 243. It includes municipality under Article 243P. It also includes municipal committee, district board, and whoever is controlling the municipal fund. So municipality are covered under the definition of local authorities. It also includes cantonment board, and for the assessment year 2020, 24, and 25, the local authority rates is 30%. It is continuing like that for the last few years. Now, so income tax is exempted, but with a rider. But in case of TDS, there is no exemption for a municipality. They have to deduct the TDS. And we all know how a TDS is done because they're all members. I'm not going to go into that details. So TDS has to be deducted, TDS has to be deposited, and anybody is responsible for making the payments of TDS. He should be liable for the provisions also. But municipalities are no way exempted from depositing, and so they have to do it. Now, TDS, we all know, we pay to the government authorities, and if and persons here definitely include the local authorities. So local authorities are covered under the persons definition of 231 for the TDS payment. Now, the consequence of default, definitely this has to be explained. Payment of tax, interest, penalty, and prosecution, that would be there. So if there is a default, that has to be borne by the municipality. Now, there is also designed under Section 40 Clause A. But as I understand, as a little bit of practicing income tax practitioner, I will say that this particular provision may not be applicable for a municipality because since they are not filing any, not going for income tax return of the profits, so this disallowance doesn't come. So this is my interpretation of that thing. But these are the two consequences of default. Now, what are the important TDS sections that one need to consider? Section 192, 194C, 194H, 194I, 194IA. These are new sections. Now, these are all very complicated. One need to understand. 194C, joint development agreement, because municipalities are now working under joint development agreement with many big, many contractors. So this is there. 194J, where from the professional taxes are, taxes on professional fees are deducted, say chartered accountants or lawyers, etc., etc. 194 LA for compulsory acquisition. This is another important thing that has recent addition to the income tax list also, and that also for the municipality. And 194Q, where purchase of goods is above 50 lakhs in a year, but there are certain conditions to that. Now, for any municipality, we all know you just deduct in the rates prescribed rates or the lower rates, then deposit, then file the periodic tax returns and the issue the forms. Now, coming to the GST part, GST's definition of local authority is a little longer. Exactly not the way the municipalities, the local authorities have been defined under the income tax. It's a longer definition. Yes, it includes panchayat under Article 243P and municipality under Article 243 and 243P. Then a municipal committee, a Zilla Parishad, etc., cantonment board, a regional council, development board, regional council under 371A. So these are all combined, but we are concerned with the municipality. So that is there. So GST is not exempted anywhere for a municipality. Now, to understand that, we also need to understand these 18 functions of a municipality. I have already discussed these 18 functions. These 18 functions are given under Article 243W in the 12th schedule. Just remember this part, Article 243W, 12th schedule. I will refer to this particular section in a later slide. So this is an important, these 18 functions. And these are all functions that a municipality shall provide. These are the services that a municipality shall provide. Now here, electricity is not there. Transportation is not there. So, but electricity and transportation, if it happens, then as I said, for the income tax act, if it is within or outside the jurisdiction, it is not exempted. It is exempted. But in case of transport, if you are running inter-jurisdictional buses, then that income from the transport may be taxable. So please look into the charging sections once again. So this is a thought, a food for thought. Now, there's a universal coverage of GST. There's no in that. There will be an input tax credit also. They can also avail some input tax credit because GST in some cases is payable by the municipality also. Like So most activities of the governments and the ULBs are covered under the GST. There are some specific exclusions given. Please, again, I will say refer to the GST Act, because again, I am not at all a practitioner of GST, but I have to know a little bit of these provisions, because while helping a municipality, you have to know it. But I'm not talking like any practitioner or an expert. But services, some certain services are the like issuance of passport or a birth certificate or a death certificate, where GST has been excluded. We don't charge any GST on these services. Now, if any natural resources is given to an individual farmer for the purpose of agriculture, many municipalities will have agricultural land with them. That's why I said those nagar panchayats who are in the transition area, it is very much applicable for them. If they are giving those agricultural lands owned by the municipality to an individual farmer for farming, then it is GST exempted. But if it is giving to any person other than individual farmer, it becomes a GST applicable. Now, certain services that the local authority is providing to another municipalities, which is under Article 243W. That's why I said 243W and 243G. Now, these are also exempted, specifically excluded. That means a municipality, if it is providing water to another municipality, so that is exempted from GST. But please see the Income Tax Act. Now, any activity in relation to healthcare and education, because many municipalities will have hospitals, primary health centers, so that is exempted from GST. And in case of they run schools also, that is exempted from GST also. Specific inclusions, if there is an auction of land or a renting of property, then those services will be subject to GST, and they have to levy GST and collect it and deposit it. Now, exemptions in respect of services supplied by a local authority. Now, if that local authority is supplying any services to central government or any state government, any services, so that is exempted. Regulation of land use and buildings and construction, that is also exempted. If services up to 5,000 in a year supplied to a government subject to certain terms and conditions. So again, services provided by local authority to an individual is also exempt from tax. Exemption is also there. Now, services by the local authority to a non-business entity, except transport of goods or passengers, is exempted. But if it is transport of goods and passengers, then to a non-business entity, it's not tax. It is taxable. Then fines and penalties, if it is imposed by the local authority, it's not a supply of service, so it is exempted. Now, if I am providing, that means if any consultant or anybody is providing any services to a municipality, and if it is a 100% pure service, 100% pure service for any of the functions which is given under 243G, that means in the 11th and 12th, the 18 functions or 29 functions, then I will also not levy any GST on the municipality. So that is exempted. So municipality will not reimburse the GST portion because that is exempted. So that is given by a notification. That number is also given. So any manpower supply for say maintenance of parks or for roads maintenance, etc., or an architectural services or a professional chartered accountant services for anything. So if I am billing the municipality and if it is within those 18 functions, then it is exempted. Now, that composite supply of 100%, later on it has been changed to 75% also. That means if 75% is services and 25% is goods and materials, then also is exempted. But if that 25 becomes 25.1 and 74.9, then that exemption no more stays, and we have to give a GST tax invoice. Maintenance of parks is a pure service. Security services, any consideration we are receiving from the government, from the central government or the union government, that is also exempted. Services by way of a legal services to local authority, that is also exempted. So I come to the end 5 minutes before the session ends, and I see there are certain questions in the chat box, 8. So I now go on to the chat box and try to deal with it. Question 1, what strategies can ULBs employ to enhance financial transparency and accountability? It's a vital question, but this question will have a vast answer. I mean, not a very easy answer. First step of a financial transparency and accountability is to improve their accounting system. Because until unless they have an robust accounting system where accounts are recorded or transactions are recorded in a good manner, we cannot achieve full-fledged transparency and accountability. And for that, municipalities must adopt a very good computerized accounting system, because this is not a this is not a uh, I mean, this is not an easy thing. It has to be done in phases. If you look into some bigger municipalities where you can find today a little bit of transparency and accountability been achieved, but again, they have started from the accounting process. Then comes the budgeting process. Then the financial management process. There has to have a lot of good people working on that. Uh, can How can ULB design and implement an IFMS to improve financial transparency and tax compliance? If I have understood your question correctly, IFM is the Integrated Financial Management System, which is the backbone of the central government and the state government accounting. If you are referring IFMS to that, then there is a legal issue. Can a municipality adopt an IFMS, because it's a central, it's under the government accounting system? That's one. Second is that if you look at the government accounting system who are using the IFMS system, they are strictly following the cash basis and double entry accounting. Now, if today we want to say that why not the urban local bodies go into the IFMS infrastructure also, then that means whatever reforms that has started from, say, the year 1995 or 2000, that will not be taken into consideration, because then we go back to a cash-based single entry accounting system where we are only going back just to adopt the IFMS. That's what I see. So to me, if you ask my personal opinion, it is difficult to go back to the IFMS. But looking into the IFMS system, looking into the double entry accounting system, yes, municipalities can develop their own, but it involves cost. Definitely, it has to be done by the state government for an uniform rollout or a common rollout in the state. Now, whether all ULBs in India using uniform accounting softwares? No, absolutely no. Because as I said, even in some cases, some ULBs in a particular state are using different softwares, the different methods. I mean, that uniformity is not there. Sorry, that uniformity is not there. But again, if I go to some particular states, I won't name them, you will find definitely some uniformity is there, and some uniform accounting softwares are being used. Are ULBs financial statements published? Yes. Yes. There is a disclosure law. There's a public disclosure law, and this public disclosure law was also one of the reforms of the JNNURM in the between 2005 and 2012. Now, in the public disclosure law, many of the municipalities have adopted this public disclosure law, where it has been said that you have to publish your financial statements at conspicuous locations in your municipalities, in your cities, so every citizen can see that, and also in your website, and also in couple of newspapers. But nowadays, newspapers, I have initially in those days, I used to see some big municipalities coming up with their newspaper publications, but no more it is there. I mean, I should not say no more. I say I don't see it, but all municipalities are publishing their the financial statement in their website. Most of them are doing so. So you can Google search any municipality and see that they are publishing their annual financial statement, audited financial statement on a regular basis. Now, next question is that how can we get audits of ULBs or other financial work? See, sir, there is always used to be a question on this, that how the members going to come. Now, these are a tendering process. This doesn't happen without a tender. Tenders happen. Many states come up with this audit and accounting assignments. So please look into the tender pages on a regular basis. Only by a tender. That's what I can say. But since this is not a business opportunity session of the CS, so I won't discuss it further. But only tenders can have it. Under GST compliance with the GSTR 7, GSTR 1, and GSTR 3 be applicable? As far as I understand, they are applicable. So they have to do these compliances. So see, once GST they are deducting, and on all contracts, they have to deduct the 1% or 2% GST TDS also. These are all compulsory. So all these are compulsory. And at this point, I would say the municipalities need a lot of support, a lot of technical support from chartered accountants, because GST Act, as I understand, is not a very easy act to implement. So they need a lot of support on that. Which software they're using for accounting, I can't say, because these are all done differently. Some off-the-shelf softwares are there, some customized softwares are there. The biggest challenge is actual accounting in annual account versus cash accounting. TSA and CAG ask for reconciliation. Now, yes, TSA and CAG are still having that that what you call mindset for the what you call cash-based accounting. So as I have not shown that slide. In fact, I deleted that slide because it's a 2-hour session. Now there has to be some upgradation or some reforms in our audit, because ULB audits are the focus of the CNAG. Only, as I said, in Bihar, it allows the chartered accountants to do audit also. But for other states, as I know, they are under CNAG, but they have not changed their mindset of auditing. And also, it's not only the CAG's TSA, it is also the state government has not said that you don't follow the previous accounting system. So what has happened, the 2 parallel accounting systems are going on. 2 parallel accounting reporting is also going on. Financial reporting is also going on. And when CAG comes on a mandate for an audit, they will always say what is there in the legislation. The legislation says it is the old system. So we will audit that system. So obviously they are not bothered whether it's an actual accounting or not. So actual accounting, as I said, it became more consultant oriented and more oriented to access the 15th Finance Commission and 14th Finance Commission grants. So the purpose of a financial reporting, that has not come out. I mean, this is the critical part I'm just saying. That has not come out. Now, next question is, can you please again explain concept of adjusted balance sheet? I have not said adjusted balance sheet. I have said about opening balance sheet. Opening balance sheet is the first balance sheet. But if there are certain problems in the opening balance, maybe 4 years or 5 years or maybe 10 years after, you find that a particular balance has been wrongly captured in the opening balance sheet, there is a provision in the NAM and also in most of the state manuals that you can have a adjustment account. Basically, it's like you rectify that adjustment account. Rectify through the adjustment account. So any differences you put in the adjustment account and you close the difference, and that adjustment account you can take to the municipal fund. So basically you are reducing your municipal fund or you're increasing your municipal fund by your debit and credit. So that's the adjustment for a balance wrongly drawn from beginning. But opening balance sheet is the first balance sheet when conversion takes place. So it's only once an affair. Later on, everything becomes more structured in the balance sheet. Okay, so that's the question in the chat box.
Yes, sir.
There
are no more questions in the chat box here.
And there's no questions in the Q&A box also. So now, if you allow, we can close. I hope I could explain myself.
Yes,
thank you for listening and all. I don't know what's the feedback. So my institute people will only say. And if I get a next session, then I will say I have talked well in this session. So otherwise, if Shabi doesn't call me in the next session, I will say this session was bad. Anyway, thank you all. Thank you for patient listening. And thank you, the institute also, the committee also, for this opportunity. But again, the thanks is without a cup of tea. Thanks. Okay. So I stop sharing. Thank you.
Yeah.
Thank you, sir. Thank you for delivering such an engaging and informative presentation. Your in-depth knowledge of the subject were evident, and throughout the session, I learned a lot and really enjoyed listening to your insight. Thank you for attending.
Thank you. Thank you. Okay. Thank you, Mr. Garg. Thank you.
Thank you, sir. Yeah.